Hi everyone and welcome to Just Jackie for April. I hope you all had a beautiful holiday weekend and managed to spend some quality time with family and friends. Now, it's been a big month, a slightly chaotic one to be honest, especially when it comes to interest rates, so let's get straight into it. Starting with the markets and the RBA, well, it's been a bit of a roller coaster. We're seeing markets react quickly to global events, particularly what's happening in the Middle East, and sentiment is shifting almost daily. Right now, the cash rate is sitting at 4.10%, with inflation still being a main focus. A big driver of that is fuel. When you're paying around $2.30 at the bowser, that cost flows through to everything. The government has stepped in with a temporary 26-cent fuel tax reduction, which helps, but there's definitely still pressure there. At the moment, the market has now factored in 2 or 3 cash rate increases over the next year, and the RBA is signalling something similar. The next meeting is 5th of May, where we may see no change, but June could be a different story. What this means in real terms is tighter household budgets with discretionary spending starting to take a hit. Now let's talk about affordability. For the average borrower, loan sizes are sitting around $800,000, and a 0.5% rate increase is roughly an extra $250 a month. When you factor in rising costs like fuel, groceries, and general living expenses, you're likely feeling closer to another $250 in pressure on the household budget. Now, from a borrowing capacity point of view, that's reducing affordability anywhere from $50,000 through to $100,000 depending on the scenario. So it's a really important time to understand exactly where you stand. In terms of rates, all lenders have now passed on the increase, but there are still some competitive options available. For owner-occupiers, People's Choice is sitting around 5.64% variable principal and interest, Bank of Sydney is around 5.94%, and both Macquarie Bank and Bendigo are around 5.84%. The major banks, including Commonwealth, NAB, ANZ and Westpac, are also matching those rates in many cases. On the fixed side, for owner-occupiers, MoveBank is offering around 5.99% for a 3-year fixed rate, which is getting quite a lot of attention at the moment. For investors, People's Choice is sitting around 5.79% variable principal and interest, MoveBank is around 5.89%, and Macquarie and Bendigo are both around 5.94%. If you're looking at interest-only options, People's Choice is sitting at 5.79%, MyState is 5.99%, Bendigo is 6.09%, and Macquarie is 6.15%. For fixed interest only, Bendigo is sitting around 6.24% for 3 years. The key message here is that there are still opportunities, but you need to be strategic. This is a great time to review your position, whether that's your affordability, your equity, or simply making sure you're on the right rate. Now, something new we're seeing more of is movement in the bridge and equity loan space, including products like 𝐂𝐚𝐥𝐿 loans. These are short-term solutions, typically over 18 months to 2 years, designed to help people through transitional periods with a clear exit strategy in place. They're flexible and can be really helpful for people navigating life changes where a bit of time and structure makes all the difference. On the property front, if you're looking for guidance, Lydian's property advisory team can support you with everything from value through to strategy and your next move. And just before we wrap up, a quick look ahead. Next month, we're launching Lydian UK. This is really exciting. So for any UK expats with property back home, there'll soon be support available to assist with lending there as well. So stay tuned. If you've worked with Lydian before and had a great experience, we would absolutely love you to share that with the people around you. Referrals mean a lot to us, and it's how we continue to grow with the right people. That is everything from me for this month's edition of Just Jackie. Thank you so much for watching. Have a great end to your month, and I'll see you in May.